Hey, what's going on? I'm Alicia Askew, your trusted and dedicated realtor with eXp Realty. I had a question come in from my Ask Me Anything post, and someone wanted to know what is the difference between FHA loans and conventional loans. And so there are other loan programs out there, but right now we are just going to highlight the two. And so I actually created an infographic to compare each loan side by side. So let's take a look. When comparing an FHA loan versus a conventional loan, one of the first differences are that FHA loans are government-backed loans, where conventional loans are not backed by the government. So that means that the government is pretty much ensuring the approval and guarantee of anyone who purchases a home under their FHA loan program. So the government, they created the FHA loans and some other loans to allow for more lenient guidelines so that more people will be able to purchase a home. One of the main benefits when it comes to FHA loans are that they do have less strict credit requirements and a lower down payment option. So the FHA down payment is 3.5%. And so compared to back in the day when loans require 20% down, this is a huge benefit for anyone who is looking for a down payment option that is a low down payment option. But one of the benefits about the conventional loan is that now they also have low down payment options as well. So you can see down payment options for about 3% or 5% down instead of the traditional 20% down from back in the day. Of course, one of the caveats when it comes to taking advantage of the low down payment options are that both the FHA loan and the conventional loan, they do require mortgage insurance to protect the home in the case of any kind of default or forbearance from the borrower. So for example, the FHA loan, they actually have an upfront mortgage insurance that you do have to pay as a part of your closing costs, as well as an annual mortgage insurance that actually comes out of your monthly payment, which is pretty much insuring the loan for that low down payment option. And on the conventional side, they have a private mortgage insurance. So if you put down less than 20%, you are paying a certain percentage of that loan due to having that low down payment advantage. When it comes to overall approvals with FHA loans, there are some mortgage lenders who are willing to issue approvals for credit scores as low as 580. So lenders, they do vary as far as what is required when you are issued an approval, especially if your score is under 620 or 640. But they may require a little bit more down or a little bit more into your escrow so that you can get that approval with a lower credit score. When it comes to approvals with conventional loans, they do have more strict requirements when it comes to your debt to income ratio, your DTI. And so that's the difference between where your income versus your debt plays a role in how much is left over to be approved for your purchase price and mortgage payment for your home. Conventional loans, they do also prefer to see a higher credit score in order to get that approval. And one of the good things about conventional loans is that you do get better interest rates typically, especially once you have that higher score. And then there's no complaining when you hear that there are lower closing costs when it comes to conventional loans versus FHA loans. So in all, when it comes to FHA loans and conventional loans, the great thing is that they do both have low down payment options that you can take advantage of. When it comes to approvals, FHA loans tend to have a little bit more leniency with your credit score and your down payment options. But conventional loan, they do look more closely at your debt to income ratio and your credit score in order to issue that approval. If you do have any questions, don't hesitate to reach out to me as a trusted and dedicated realtor, or I do have preferred lenders who I can connect you with to help provide more clarity and advice in your decision in purchasing your new home sweet home.